property investments continue to be a popular pension asset. A recent survey has shown over 1,000 landlords recently quizzed about the state of their current pensions have shown that half of those were aged over the age of 45. Over half of those quizzed have said that the properties purchased were purely for the pension pot. Those over this age were also far more likely to live closer to their rental properties. 4 out of 10 were living within a 5-mile radius of their rental property. Surprisingly, over half of those in this over 45 group owned more than one property, but only a quarter of this demographic saw these property investments as a business. These findings in the private rental sector have been seen as particularly appealing for prospective landlords, particularly as a means to find retirement. As an industry, it is increasingly important that we continue to support these ties, providing long-term benefits to tenants looking for a property to call their home, and also for landlords looking for ways to fund their retirement. The importance of property investments as an important channel within a retirement portfolio is that in the past there has been concern that landlords would be dumping stock at the first sign of a downturn. But in the financial crisis, that didn't transpire, and people simply stuck with it. People were instead looking at the income they could generate from rental income. This is particularly interesting in that it draws attention to the fact that property can battle through tough economic pressures, which is particularly relevant when evaluating the current state of the economic climate in the UK. The Telegraph has recently drawn attention to it this year with the economic benefits of investing in property over putting money into conventional pension funds. Based on property price growth over the last 20 years, if this growth continues at the same pace, the value of a £220,000 property will be worth as much as £1 million by 2038. This may seem ambitious, but a property over a pension fund appears a no-brainer. Even when assessing the worst case scenario with no monthly profit, you have still obtained a significant capital appreciation. Of course, this strategy not only requires a higher initial startup, but also carries with it a drain on time resources. It is up to you whether you opt to invest in a buy-to-let retirement property, but if the figures are anything to go by, it would appear to be a wise investment.